I'll phrase it a different way, is we're seeing a much earlier ramp in the cycle than we've seen in the past, which is very interesting. Yeah, it's very rare to be this strong this early in the cycle. Now, we are front-running some of the capital flows, and so there's probably some correction that happens by the rumor sell the fact. But I think if the space continues like this and we start getting monetary easing and the other conditions that tend to jumpstart the business cycle again, then we should see a very strong 2024 and most likely a strong 2025. The business cycles have been almost like clockwork, 2-year up cycles, 1 year peaking, 1 year down. And that corresponds. What's amazing is the Bitcoin halving cycle is the same as the debt refi cycle, which is, I think, what drives everything. It's the same as the election cycle. They're all the same thing. So, if that continues to repeat, then it should go until 2026 when that should be a bear market year. But, let's see. So I am obviously very bullish. I don't know. And I was talking to Nova about this yesterday. I've got 3 outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and, all the other assets accordingly where they are on the risk curve.
Real Vision founder Raoul, typically reserved in offering crypto price predictions, recently shared his insights on the potential trajectory of the Bitcoin price in 2024. In his latest interview, Pal outlined 3 distinct scenarios, assigning the highest probability, 60%, to a conventional crypto cycle. In this scenario, he envisions Bitcoin being propelled to a price range of $100,000 to $200,000 in 2024. For a more in-depth understanding of Pal's perspectives, including his outlook for Ethereum, it is recommended to watch the entire video where he elaborates on the other 2 scenarios. Pal's departure from his usual stance on price predictions underscores the significance of his outlook for the crypto market. The 60% probability scenario hints at a more traditional cycle, aligning with historical patterns of Bitcoin price movements. Investors and enthusiasts keen on understanding the potential future of Bitcoin and Ethereum can gain valuable insights by delving into Pal's comprehensive breakdown of these scenarios in the full video. Daily Dose Crypto Challenge. Win $1,000 of Bitcoin. Simply subscribe to our channel, like this video, comment below how much you think Bitcoin price will be on January 1st, 2024. Winner will be announced January 1st, 2024, 6 p.m. GMT time. Good luck.
Yeah, let me frame it for people in a way that people might understand it better. So I think many of us know by now that we're building some sort of digital network states. And we've been doing this over time, even over Facebook and all of the other social media. It's moving towards these online societies. And what crypto did was enable digital online societies to also have a system of money and accountability and finance and value transfer and all of this stuff, which is a new layer onto the internet. So we've created, and I've talked about this in the past, a parallel financial system. So let's call that crypto land. In the other world, which we can call fiat world, we have this massive but broken financial system, and people still having to seek returns, and returns have generally been subpar for many in that, and it's difficult to participate. So how does so this new economy, I think of it like an emerging economy, crypto land. So how do economies work? Economies work. GDP growth is driven by population growth, productivity growth, and debt growth. Those are the 3 components that make GDP grow. So when you go to the fiat world, we've got aging populations and in many countries shrinking. We've got low productivity that may get changed by AI and other stuff, but it's still yet to be proven. But the old population is less productive. And debt growth stopped essentially in 2008. And all new debt growth is really just servicing of old debts. When we go to this new emerging economy, we have population growing at 100% a year, which is the number of active wallets. If you think of it, it had a massive recession in crypto land in 2022, and the population grew 42%. So it's like, okay, this is an amazing thing. So obviously GDP growth is faster. Productivity growth keeps increasing. Things like smart contract was a new increase in productivity for crypto land. Let's say compressed NFTs, maybe what Solana's doing with Firedancer, maybe ZK proofs, all these things are productivity increases. And then debt growth, well, we've just wiped out the debt from the last cycle, so we're going to rebuild debt again this cycle, because that's what humans do. They love a bit of debt. So now what you've got is this new digital economy that's not easily accessible to everybody. Not everybody's got a passport to go there. And then you've got this fiat world. And what this ETF is a trade agreement that fiat world people can go and invest in crypto land without having to be a native. They don't need a wallet, they don't need to self-custody, they don't need any of this stuff that we all go through every day as part of our lives because we're citizens over there, but they're not. But what they've got is a free trade agreement. So free trade agreements really are all about, where do I get my highest return on capital? So people want to do free trade agreements with India because it's a growing population, large economy. It's the same thing. Fiat world will be saying, well, am I going to get a higher rate of return over in crypto land? In which case, I'll put some of my money at work there. That's why this is important. It's not about a single event of, we're just going to bring RIAs in. It's something much bigger. It's bridging these worlds. And then as the money comes into crypto land, it then finds its way into the other states within crypto land, whether it's Bitcoin land or whether it's ETH land or Solana land or whatever it may be. And it gets reallocated on the risk curve. Some of those are smaller emerging states and some of them are more established. So when people think of it like that, it's just an emerging market that's opening up for people to be able to invest. Yeah, so again, we've got this foreign direct investment coming in. So where is that capital going to be put to use? And what is going to be the big unlock? My mental model for this particular cycle is the everything, everywhere, all at once cycle. Because if we think about it, $67 billion went into VC, into the space in 2020 and 2021. That money has been given out to founders who are building all sorts of applications and projects and everything else. Some of them will be infrastructure layer, some will be applications layer, and everything in between. And if you see the focus of where most of these teams are working on, it's kind of everywhere. So we're seeing the asset management that the fiat world companies are building on rails from crypto land. So, this is Franklin Templeton. This is all of these people looking at tokenizing real world assets. I think that starts, the first wave of that starts. Then we're seeing at the other far end of the spectrum is everybody's focused on gaming because there's a huge audience there. So somebody's going to crack gaming in some respects. And pretty much every protocol has got teams working on that. We've got in the middle, things like compressed NFTs and Solana, I think are a much bigger deal than people understand because I think it allows for ticketing. And ticketing is at scale consumer application of blockchain of which you don't need to know it's blockchain, which is what the space has been waiting for. We've seen some attempts at social media and other sides of that. Maybe we'll see more of that. The brands haven't stopped. So we're still seeing the luxury fashion brands in the NFT space. And I think we'll see a continuation of that. We've also seen the car companies, sports teams and others. So I think that continued space builds out as well. So I think it's more the applications of technologies than technologies. I think we've also got the identity idea that's, there's WorldCoin, there's a few people who've started in that space, and then using zero knowledge proofs, which came around in the last cycle, the applications layer from that. So I'm just thinking it's actually going to be broader than people imagine. And it's going to be more inclusive because we've now got this trade deal, the ETFs, because I think, we've got the Bitcoin one certainly coming and it's a pretty high chance we'll get the ETH one as well. I've given up giving prices to people because people on the internet, they're just not nice. And so you get, Raoul says this, so-and-so says that, it didn't do that. So I'll phrase it a different way, is we're seeing a much earlier ramp in the cycle than we've seen in the past, which is very interesting. It's very rare to be this strong this early in the cycle. Now, we are front-running some of the capital flows, and so there's probably some correction that happens by the rumor sell the fact. But I think if the space continues like this and we start getting monetary easing and the other conditions that tend to jumpstart the business cycle again, then we should see a very strong 2024 and most likely a strong 2025. The business cycles have been almost like clockwork, 2-year up cycles, 1 year peaking, 1 year down. And that corresponds. What's amazing is the Bitcoin halving cycle is the same as the debt refi cycle, which is, I think, what drives everything. It's the same as the election cycle. They're all the same thing. So, if that continues to repeat, then it should go until 2026 when that should be a bear market year. But, let's see. So I am obviously very bullish. I don't know. And I was talking to Nova about this yesterday. I've got three outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect, because people are quite scarred because the last cycle seemed shorter than most people expected. Everyone thought there was another final leg higher, and that never really happened. The kind of 100,000 Bitcoin, the laser eyes idea never got there. But maybe this time the shock is for excess returns beyond expectations. The other side that I grapple with as well is, well, maybe the whole cycle's front-loaded, and in fact it's shorter, but more violent in 2024. So those are the three scenarios that I'm juggling in my head with, but 60% probability is it just does what it says on the tin and repeats what it usually does. For retail, it's just price action, and what's likely to happen is the moment the Bitcoin ETF is launched, the market will focus on front-running the ETH ETF. If the previous front-running made money, they'll do it again. So retail will get very interested, and ETH's a broad, deep ecosystem, and people are happy to get exposure to it. The institutions, it depends whether they give the yield of ETH in the ETF or not. If not, a lot of the institutions would prefer to own ETH itself, because then they can stake it and get yield. Because if you don't give them yield, some asset manager who launches the ETF's going to get rich. BlackRock, they'll make all the money because they'll get the ETH staking yield, and they don't give it to the ETF holder. And we've seen that very commonly in ETFs in the past. So I think that's the thing, because when I speak to institutions, they get ETH because it's just like, here's a bet on technology. It's a broader based thing, and we get a yield, so we can just sit on it, which they don't get with Bitcoin, but they understand the Bitcoin story as well. So they understand there's two different things here at play. I think it's new information, but they will figure this out pretty fast, because the people who are going to add an ETH ETF into their portfolio are reasonably advanced, or they're RIAs because they got retail clients who want it. The people who are much more cautious, but they want crypto exposure, will definitely go for Bitcoin. So I think there's a level of sophistication that means that they would most likely ask the question is, how do I get the yield? Yep. So my crypto markets are forward-looking. So most people are saying, well, we're probably around a recession. We're seeing unemployment go up, blah, blah, blah. Crypto knew about this last year because it's forward-looking. It actually trades on liquidity conditions. And I do a lot of macroeconomic research at my research company, Global Macro Investor. And for us, the liquidity cycle just keeps going for the next 2 years. So we will see a bottoming of the economy, maybe Q1, Q2 of next year, that people will visibly start to see things improving, but the markets are already trading it. The equity market's already almost back at the all-time highs, crypto market's ripping because they're discounting this. If we live that 6 months in the future, are the Fed likely to be raising rates or cutting rates? Cutting rates. At worst, they don't do anything. But that's so the probability is for easing of liquidity conditions. Is there a chance, because we're going to an election year, that they stimulate with fiscal stimulus? Pretty much 100% chance they'd like to buy votes. So 2024 is all about stimulus and economic recovery. That's a very, very, very good backdrop. And that's the transition from crypto and macro spring into crypto macro summer. And that macro summer, crypto summer, is we're starting to see growth pick up, but inflation's not picking up yet. It's still falling from the lagging effects of the old cycle. So inflation is not a problem, growth is going up, and liquidity is coming into the system. That's like the perfect environment.
Macroeconomic expert Raoul shares his predictions on the forthcoming cycle, offering valuable insights for crypto investors. In his analysis, he focuses on the Bitcoin cycle and envisions a potential surge in its value, ranging between $100,000 and $200,000 in 2024. Powell's expertise adds depth to the understanding of market dynamics, providing investors with crucial information to navigate the evolving landscape of the cryptocurrency market. His departure from conventional reservation in making price predictions underscores the significance of his outlook. The projected surge aligns with historical patterns, reflecting a traditional cycle that investors may find informative for strategic decision-making. For those immersed in the crypto space, Raoul Pal's insights offer a nuanced perspective, shedding light on potential trends and opportunities in the market. Whether you're a seasoned investor or a newcomer to the crypto world, Pal's analysis serves as a valuable resource to inform your investment strategies. His predictions contribute to the ongoing dialogue surrounding the future of Bitcoin, adding another layer of understanding to the complex dynamics of the digital currency market. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.